Hey guys, how's it going? It's Andy from Magoo Investing. Happy Friday. The stock market has just been chugging along. On Tuesday, we had the end of a 7-day green streak, and besides that, the market has just been kind of doing its own thing for a while. We had some good news coming out of the jobs report where, for the first time in I think 18 or 19 weeks, we had jobless claims under 1 million. So obviously that's still a lot of people filing for unemployment, but we're seeing a slowing of that overall. And we've seen some numbers about people are going back to work, and there's a lot of positives. However, I'm kind of getting a sense that the market's going to have to fall at some point. And I really don't know how to compare it other than with fantasy football. Obviously, we had the horrible news that the Pac-12 and the Big Ten have canceled their football season, but that means that my football team, the Oregon State Beavers, will go undefeated for the first time in forever because we suck at football. But with fantasy football, every year I go in with this huge plan of how I'm going to draft an incredible wide receiver with my first pick and then maybe a running back. And that's kind of how I've been looking at the stock market. I've been doing a lot of research, trying to find the best plays overall. But then with a fantasy draft, it only takes one person that really didn't do their homework, and maybe they take a quarterback, and then it's just a panic, and everyone starts taking quarterbacks way before they planned. And that's kind of how I expect the market's going to crash. It's not going to be from one of these news stories that I had circled on a calendar for a while. I think it made too much sense for me to be circling the end of the unemployment benefits, and some other areas where I thought the market could fall. I think when the market falls, it's going to be just one random news story that's going to be bad, not expected, and people are just going to start selling off their shares. So going forward, I am starting to look for safer stocks. And what I mean by safer, I'm going to have two different types of safe stocks in this video. I'm going to have the dividend stocks, which are not something that I have messed around with a lot in the past. But I think dividend stocks are very attractive when you think that the market's kind of teetering on the fact that it might fall soon. And then the other two stocks are going to be stocks that I think will do well no matter what happens in the market overall. And I'm very excited to share these 4 safe stocks with you in this video. Before getting started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just me giving my own opinions on the stock market, and you need to do your own research before making any investment decisions. Also, if you've been enjoying these videos, I really appreciate it if you hit the like and subscribe button, as it would help my channel out a lot. With that out of the way, let's get started and talk about the 4 safe stocks I'm looking to buy throughout the rest of 2020. So the first stock I want to talk about in today's video is going to be Procter & Gamble, ticker symbol PG. And so far in 2020, Procter & Gamble is trading for $136 and it's up 9% year to date. So it's done pretty well, but it's nowhere near some of the major tech stocks that we've talked about with like an Apple or a Microsoft. When trying to explain what Procter & Gamble is, you can't just talk about some of the brands that they have. I'm going to put up on the screen right now me scrolling through their website of all the brands they own, and yeah, there's a lot of them. It's kind of hard to explain, but they have pretty much any type of product that you could buy at like a grocery store, type of personal care, home products, and they have pretty much everything. And so Procter & Gamble has been a popular stock, specifically in 2020, mainly because it was a type of company that people thought was going to do really well during the pandemic. Most of the products that they have in their lineup are stuff that you're going to be buying no matter what the circumstances are. And so these are non-cyclical stocks, meaning cyclical stocks being stuff that does well when the economy is doing well. And so you're going to be buying toilet paper whether or not the economy is doing well or not. And so that was kind of the idea behind Procter & Gamble when the pandemic first started. And going forward into a recession, the same thought process applies there. And that's why I think Procter & Gamble could be a great safe stock to buy going forward. And so looking at the 1-year chart, you can see how quickly the stock recovered from its lows. And looking at the all-time chart, it's pretty good. That's what I like to see for a long-term investment. I'm looking for overall stability. If the stock falls, I want to have a good explanation why. 2015, there were some drops, mainly because some problems overseas, mainly with some currency stuff. But besides that, the company has been run very well recently. And one of the reasons why I put it on this list is because of its very nice dividend of 2.4% and 27 years of annual increases to that dividend. And I teased at the beginning the fact that I like dividend stocks right now. And the main reason is going into the market right now, I don't feel comfortable buying a stock because I think the market could crash at any time. Dividend stocks are great because they pay you cash. And what can you do when you get given cash? You can buy more stocks, especially if the market falls. So this could be a great opportunity to buy now and be able to take advantage of the gains if the stock does go up. But if it does fall, the dividend yield is going to increase overall, and you're going to get some cash back where you can lower your average price on this stock or any other stock. And so it's a great way to lower your average cost, and I think that's a pretty decent idea going into some of the uncertainty for where I think the market's going to be going. And so I have not been a huge dividend investor overall. So far, the only dividend stock I've held for a long-term position has been AT&T, and it's nice whenever you get that dividend payment. I've mainly been buying back the same stocks that I get the dividends from, but you can do whatever you want with that cash. You can take it out and spend it, you can buy other stocks, or you can reinvest it into that same company. You just have a lot of options with dividends, and that's why I think it's very attractive when there's a certain level of uncertainty in the market. And so the company announced a 3% increase in sales in the past year, and they've announced that for the next year, they expect to see growth of sales of 1 to 3%. So the outlook looks very good. You have a solid dividend stock with a fantastic track record, 27 years of dividend growth, and that's why I put it as number 1 on my safe stocks to buy. And the next stock on this list is going to be Johnson & Johnson, ticker symbol J&J. Currently, J&J is trading for $148, and it's only up 1.5% year to date. And similar to Procter & Gamble, J&J is very attractive because of its incredible dividend and the history that it has with that dividend. So J&J is both a pharmaceutical company and a consumer products business. So it does very well during the pandemic because of the consumer products. And it's very interesting because they are one of the hundreds or thousands of companies that are working on a potential vaccine. And while that would result in an incredible increase in the stock price, that's not the reason why I think it's a good buy. I think it's kind of a very low chance that things actually work out for that. But if it does happen, I do think it's an important thing to bring up if you're going to consider investing in this stock. And so as I mentioned, J&J is one of the most well-known dividend stocks of all time, having 58 years of consecutive dividend growth, which is incredible, being a dividend aristocrat. And that type of stability is a main reason why, for a long-term investment, it's very attractive. And so this is a stock that has a 2.7% dividend. It has an incredible history of increasing that dividend, and I don't see that going away anytime soon. And one of the main reasons why I'm very bullish on J&J overall is the fact that they saw a 34% drop in their medical devices sales to mainly hospitals. And while this doesn't sound great, it makes a lot of sense because many hospitals are not going to be spending money on some of these medical devices that aren't as applicable for the pandemic. And people are delaying operations that are not as time sensitive. So going forward, I'm expecting that the hospitals are going to be spending more money on these devices as they have not been investing into their organizations for a long time. Also, people that have been putting off these operations, there's probably going to be a nice backlog of people needing to have these operations. So I'm expecting this part of their business to bounce back very well. Also, their consumer products are stuff that is going to sell very well during a recession. So similar to Procter & Gamble, I'm not worried about that overall. And so overall, Johnson & Johnson, ticker symbol J&J, is the largest healthcare stock and company out there. And when I'm investing in a sector that I don't really know a lot about, I think it's very important to buy the top stock. And I think J&J fits all that criteria and is why it's a blue chip stock overall. And so the dividend history, the fact that it'll do very well during a recession, the likely increase in their medical devices sales makes me feel very bullish on J&J overall. And similar to Procter & Gamble, if things do fall, the dividend payout is a great way to lower your price for whatever position you have. So let me know what you think about J&J in the comment section down below. And so next up, we're going to be talking about my favorite recession-proof stock. And so this is going to be Visa, ticker symbol V. Visa is currently trading for $197 and it's up 5% year to date. And so I've talked about this as being one of my favorite safe stocks overall. Going into the pandemic, this was a stock I identified as being a potential great buy. And while the stock has not done as well as a competitor like PayPal, I like Visa for the long term because of the track record it's had during the past recession. And so compared to a lot of the other payment platforms out there, Visa is very safe in the fact that they don't deal with credit and dealing with loans. And so loan delinquency is a major problem going into recession. And Visa doesn't have to deal with that. They only take a small transaction fee between the customer and the banks. And so that's how they make their money. And so we've seen a significant drop in sales overall, just transactions, as people are not going out as much and spending as much money. But they've seen increases in their online sales, and the company's been working on contactless transactions, which will be very nice, and I think will become the kind of norm after the pandemic is done with. Looking at the one-year chart, there is a very solid resistance around the $200 mark, and so I don't think it's a great opportunity right now. This is a stock that I would have on my watch list and kind of just put an alert down towards the, I don't know, like $190, $185 mark to see if things fall, because right now, unless we see some significant news and the fact that their next earnings report isn't until the end of October, you're going to need a serious catalyst to break through that $200 mark. And so this is a stock that I would love to hold for a long-term position, but right now it's butting up pretty close to a serious resistance, so I'm going to be waiting on that. And so overall, this is a fantastic quote-unquote recession-proof stock, and I think it's a great stock to have in any stock portfolio. I just don't love the current price based off of the solid resistance that we've seen at $200. So it's going to be a stock that I'm looking to add in my portfolio by the end of the year, but hopefully at a significantly more discounted price. So let me know what you think about Visa, ticker symbol V, in the comment section down below. And so the last stock I want to talk about in this list is going to be very different. So far, we've talked about two blue chip dividend stocks, and then we talked about Visa, which is a very well-established company. For the last stock in this video, I wanted to talk about StarBucks, ticker symbol SBUX. And so you might be wondering, why do you consider this to be a safe stock? And if you've ever met anyone that is serious about their Starbucks coffee, you'll know how die-hard of a community they have. And so going forward, I think Starbucks is going to recover very well. This was one of the companies that got hurt the earliest when it came to the overall pandemic because of their exposure to China. Compared to most of the companies out there that started falling towards the end of February going into March, when I put up the one-year chart for Starbucks, you can see that the decline started back in January, as they were one of the first US stocks to kind of ring the alarm bell on coronavirus. And so currently Starbucks is trading for $79 and it's still down 10% year to date. And so some of the reasons why I think Starbucks is a great safe buy right now is, number one, they're one of the first stocks to get hit by the exposure to China. And as a result, it is at a significant discount compared to the other stocks that we've talked about so far in this video. Also, going off of that, I've talked in recent videos why I'm liking buying more of the stocks that have been exposed to the pandemic more compared to these top performing tech stocks that have done incredibly well so far in 2020. Because when things start to open up and we start getting positive news, these beaten down stocks are going to be the ones that jump significantly. And if things start to get worse and we have some poor news, those tech stocks are going to be the first ones to give back those gains. Whereas something like Starbucks that is already down on the year, I don't think will take as big of a hit. And then finally, consumer staple products are just a fantastic investing opportunity going into a recession. And so I've talked about it on this channel, consumer staple products. We've talked about Procter & Gamble. We've talked about Coca-Cola. And I think Starbucks kind of fits that bill. People are wild about their coffee. As a coffee addict myself, no matter what the circumstances are, I will make sure to get my 1 or 2 or 3 or 4 cups of coffee every day. And I think going forward, Starbucks will recover very well. This is a brand that people absolutely love, and you can find it everywhere. In my town of like 50,000 people, yeah, there's I think 10 or 12 Starbucks overall. And anytime I go past my local one on my run, there is always a line through the drive-thru. So people love their Starbucks, and I think we'll see a nice resurgence in their sales when people start going back to work fully. The company announced that they were expanding their agreement with Alibaba to do deliveries in China, which is very nice, and it builds off of an agreement that the companies have had since 2018. So this should increase their sales and exposure in China and should boost their numbers in the upcoming quarters. And so at this point, most Starbucks are open fully, and they've done very well with their mobile orders and their drive-through options. And so I think this is a stock that is a great opportunity for a long-term position. And I think going forward, I think it has the growth potential, and I think that since it's been beaten down, if we do have more bad news, I don't think this is going to be a stock that will fall significantly, considering they are a consumer staple product. So very curious to see what you guys have to say about these stocks on this list. I wanted to include 2 dividend stocks and then 2 more well-known stocks for the average investor. And I'm very curious to see what you guys think are the safe stocks to buy for the rest of 2020. Thanks for watching this video. I appreciate all the support, and I will see you on Monday.